Fantastic. This is Steve Spangenberg coming to you live today, and I'm going to be talking to you about something that I used to call the elimination of income tax frustration, and that is the benefit of having a home-based business on your taxes. And we're going to be talking about a few things. This is a very brief summary call. I could speak all day and all night about this, going into a lot of detail, but we're going to keep it brief. So I just want to first introduce myself. Once again, my name's Steve Spangenberg. I'm a home-based business tax expert. Been doing taxes for 44 years, ever since I've been 14 years old. And my dad was a CPA. My mom was a bookkeeper. I had no choice. And I learned from a very young age, from the age of 16, that the only way, and I challenge everybody to tell me another way, the only way to permanently lower your taxes is by having a home-based business. My first client was my mother's Avon lady, and I proved to her and her husband that it was beneficial for her not only to have her Avon business as an income producing, but also as a tax reducing vehicle every single year. So I get results from my clients. That's the bottom line. Tens of thousands of tax returns later, still getting results because it's still beneficial to have a home-based business. Disclaimer, this is not legal advice. Every tax situation is different. Please consult your tax advisor for your situation. That's my little disclaimer there. And every situation is different, but a lot are the same. It's the same philosophies that we go through. Now I'm going to get right into it. There's no fluff and stuff in this presentation. Once you sign up for your home-based business, are you in business? The IRS looks at this rule called a hobby rule. You'll hear about it. Oh, you're a hobby or you're a business. A lot of accountants, they don't want to deal with people in multi-level marketing or direct sales. They say, oh, you're a hobby. We don't have to do anything. That's just their projection upon you. Are you in business? The IRS looks at these basic three things. There's a lot of other little minuscule things, but if you can get these basic three things down, you are in business according to the IRS. Number one, do you have intent to profit? Number two, do you have sufficient activity to produce a profit? And number three, do you have good record keeping? Now notice I didn't say, do you produce a profit? Because you can have a loss as long as you want, as long as you do these three things. Because a lot of what we're going to talk about today are paper losses, like converting some things that you already do to business deductions. So, number one, intent. This is evidenced by a written business plan. If you get in business, you have a business plan. Number two, if you're in business, you're going to do activity on a consistent, persistent basis, and that's evidenced by your date book. Keep a date book of what you do every day for your business. And number three, record keeping. I'm not going to turn you into an anal bookkeeper, but I am going to say get a system where you can keep a track of what comes in and what goes out. So all that follows this is going to be prefaced by, are you in business? These are deductions that are available for people who are in business. Okay? Now the philosophy is to convert everyday expenses into business deductions. Now there's going to be some additional ones like purchasing product, office supplies and things like that. But we're going to take a look at what we do every day to convert our everyday expenses into business deductions. Because I'm telling you people, there are two tax systems in America. Number one tax system is for employees. Number two is for business owners. Very, very simple. Employees, they make money, they pay tax, they live on what's left. Business owners, they make money. Oh, I got that mixed up. Number one, the employees, they make money, they pay tax, they live on what's left. Number two, the business owners, they make money, they live and pay tax on what's left. So very subtle difference, but very important. What we want to do is fall into this business owner category because that's where all the deductions are available. Employees don't get many deductions. Business owners, they get the deductions. Okay, very simple. Let's look at this philosophy, like I said before, the philosophy of converting what you do anyway into business expenses or business deductions. What you do anyway. Number one is your vehicle. This is your biggest expense, and the IRS is willing to give you up to 55 cents, sometimes more, depending on the year, depending on who's in office. Just roughly about 50 cents or so for every mile that you drive. Now the trick is, what you want to do is take every mile you drive and make that a business mile. How do you do that? Well, you go around town. If you're going to go to the gas station to fill up, step inside a Sheetz or step inside your gas station and hang some flyers up on the billboard and take some business cards down, because those people need your product or service anyway. That's what I did for years and years. I built my business on just stopping at Sheetz's and Wawa's and hanging stuff on bulletin boards. And I got to deduct all my mileage. You can deduct your mileage, put it in a mileage log, and you're going to get paid. Your deduction is around 50 cents a mile. Now I'm going over this in a real summary way. A lot of these is covered in detail in my tax reduction package. Now take for example, if you drive 10,000 miles for business, and you convert that to, or 10,000 personal miles, if you convert that to business miles, you're going to get about a $5,000 deduction. Now that deduction is worth about $1,000 in cash to you for the average person in 20% tax bracket. All right, worth about $1,000. So it pays to drive your car for business. There's many ideas that I have in the tax reduction package on how to do that. Number two, travel. You go on vacation. I go on vacation every year. Last year I spent a month in Europe. I wrote off every single penny of it. That trip cost $63,000. That was a big write-off for me. Okay? And there's ways to do that. But let's say you just go on a vacation down to Florida or something like that. It costs you $5,000 between your hotels and your driving and all the things that you do on vacation. Turn that into a business trip. Okay? The tax reduction package tells you how to do that. See, because when you're in multi-level marketing and direct sales, you're in the people business. And when you go on vacation, there are people there. The IRS said if you work 4 hours and 1 minute out of every day, you can deduct that as a business day. Now, our work is talking to people. I talk to people all the time wherever I go. All right? And I can convert my vacation days into business days. So if you spend $5,000 on a vacation and you're in about the 20% tax bracket, you're going to save another $1,000 on your taxes. Number three, biggest one, is your product. A lot of people are in health and wellness or in cosmetics or oils or things like that. But in 99.9% of all direct sales companies or MLM companies, they require you to purchase a certain amount in order to get paid every month. Usually about $100 worth of product you have to purchase every single month. Guess what? You get to write that off because you have to buy it to get commissions. So that's a $1,200 deduction for you. Plus, there are other ways to make every single product that you buy deductible. But we're looking at the big one, $1,200 deduction just for buying your products that you take. You're going to take anyway. Okay, I take supplements anyway. When I was in I retired from an MLM, direct sales company with vitamins. I was going to take vitamins anyway. I might as well learn how to write them off, right? So now let's look at some other expenses. Your home office expense. You're gonna use an area in your home to conduct business, to have your computer and to store some product, things like that. Your cell phone, your internet. All of a sudden, all these things become tax deductible because you're in business. You use your cell phone for business. Guess what? If you're on a plan, you can write off 100% of your plan. Use your internet for business all the time. Every email that you send should have the signature with your website on it. Just a little signature saying, hey, if you're looking to make money or know somebody that is or wants to have good health, click here. All right. Now I'm going to go back. I'm going to circle back to this home office now because this is just fun. This is so much fun when I used to do this in live seminars. Because what happens is when you write off a home office, you get to deduct a portion of everything that happens on your property. That means a portion of your home mortgage interest, portion of your real estate taxes, your insurance, your rent, your utilities, your electric, water, gas, oil, all your repairs and maintenance. Every time you put a light bulb in anywhere in the house, you get a percentage of that. Your grass cutting, your snow shoveling, your lawnmower, your snow shovel, your salt, all these things, and even including toilet paper. And people used to say, oh my God, toilet paper. Yeah, because if I come to your house for a meeting and there's no toilet paper, well, it's trouble. So all these things. See, these expenses now, the home office, cell phone, internet, they all add up. Between all those expenses there, you're going to get maybe like a $6,000-$7,000 deduction. Then on top of it, your children. If you have children between the ages of 7 and 17, you can pay your children to work in your business, to help you out, to cut your grass, to wash your car. Do things around the house, fill out flyers, send emails. There's a great software online called Like for Like. You can have your children do that software to help you get likes on your social media posts. Put them in front of the computer, let them work that software so you can get more likes on your social media. And you can pay them for it. And when you pay them, you put it in their bank account, take it out of your bank account, pay for their school clothes, pay for their braces, pay for food. All these things. People used to come to me all the time, Steve, how do I pay for my kids' soccer expenses? Well, easy. Get a home-based business, pay them through your home-based business, and use that to pay for the soccer things, and you get a deduction for it. Now, there are a lot of rules around these things, and it's all covered in tax reduction package. Now, I know I went over that very, very fast. The bottom line is this. I've been doing this for 44 years. There's only been about 5 or 6 people that I could not save money for while they have a home-based business. Okay? 99.9% of the people, they get a home-based business, you can save money. You got to learn to save money on your taxes. It's your biggest expense for most people, or your income taxes. Now, how to get in touch with me? You can contact me at steve@domytaxes.com. You can go to my website there, domytaxes.com/taxpack, and you can purchase the tax reduction package. You can have a look at that. The only question I have for you is, would you trade $147 for $2,000 to $3,000 for the next 10 years? Over the next 10 years, I could save 99.9% of people listening to this. I could save them over the next 10 years $30,000. Would you trade $147 for $30,000? That's the only thing. I used to charge $395 for this information, and I sold thousands and thousands of those out of a little binder, 29 pages. People have saved thousands and thousands of dollars just by having a home-based business. So I know that was quick. It was meant to be quick. It was meant to get you to the next step, which is either contacting me, get back to the person who shared this video with you, go to my website and purchase the tax reduction package, or give me an email. I'll be happy to answer any of your questions. But until then, this is Steve Spangenberg. I hope you make it a profitable day.